rooted ones. Today, we're exploring an essential topic for every taxpayer: penalties and compliance. The tax system relies on honesty and accuracy, but mistakes or intentional errors can lead to significant penalties. Let's discuss the common types of penalties, how to avoid them, and why compliance is so important. Why do penalties exist? Taxpayer penalties are designed to encourage accurate and timely tax filing, deter fraudulent or negligent behavior, protect the integrity of the tax system. They ensure fairness by holding everyone accountable to the same standards. Common taxpayer penalties. Failure to file penalty. When it applies, if you don't file your tax return by the due date or an extended deadline, penalty, typically 5% of the unpaid tax per month, up to 25%. How to avoid it? Always file your return on time, even if you can't pay the full amount. Failure to pay penalty, when it applies. If you don't pay the taxes you owe by the due date, penalty 0.5% of the unpaid tax per month, up to 25%. How to avoid it? Pay as much as you can by the deadline and arrange a payment plan for the rest. Accuracy-related penalty, when it applies. If there's a substantial understatement of tax or negligence in preparing your return, penalty 20% of the understated tax. How to avoid it? Double check your calculations and consult a tax professional for complex returns. Fraud penalty, when it applies. If you intentionally falsify information to avoid paying taxes. Penalty 75% of the underpayment due to fraud. How to avoid it? Always provide truthful and accurate information on your tax return. Substantial understatement of tax penalty, when it applies. If the understated tax is more than 10% of the correct tax liability or $5,000, whichever is greater. Penalty 20% of the understated tax. How to avoid it? Use the reasonable basis standard or substantial authority standard for uncertain tax positions. Failure to make required estimated payments when it applies. If you don't pay enough taxes throughout the year, especially if you're self-employed or have significant non-wage income. Penalty, interest on the underpayment. How to avoid it? Make quarterly estimated tax payments if you expect to owe more than $1,000. Standards for avoiding penalties. The IRS allows taxpayers to avoid certain penalties by meeting these standards. Reasonable cause. If you have a valid reason for failing to comply, such as illness or natural disaster, you may request a penalty waiver. Reasonable basis. Standard. A position is considered reasonable if it has a 20% chance of success. Substantial authority. Standard. A stronger defense requiring a 40% chance of success. Penalties for frivolous tax returns. A frivolous tax return includes arguments or claims that have no legal basis, such as refusing to pay taxes on constitutional grounds. These can result in a $5,000 penalty in addition to other applicable penalties. Disclosures for uncertain tax positions. If you're taking a position on your return that may be questioned, filing Form 8275 or Form 8275R allows you to disclose your reasoning. This transparency can help you avoid accuracy-related penalties. The cost of noncompliance can lead to financial penalties, legal action, and even criminal charges for severe cases like tax evasion. Beyond monetary consequences, noncompliance damages your reputation and may result in IRS audits. How to stay compliant: file and pay on time. If you need more time, file for an extension, but remember that an extension doesn't delay payment deadlines. Keep accurate records. Maintain detailed records of income, expenses, and deductions for at least 3 years. Seek professional help. A tax professional can guide you through complex situations and help you avoid costly errors. Use tax software. Many tools can help you calculate taxes, deductions, and credits with greater accuracy. Why compliance matters. Compliance isn't just about avoiding penalties. It's about contributing to a fair and functional tax system. By meeting your tax obligations, you reduce stress and financial risk, protect yourself from audits and legal trouble, support public services and infrastructure that benefit everyone. Final thoughts. Understanding taxpayer penalties and compliance is key to staying on the right side of the tax system. With accurate information, careful planning, and professional advice, you can avoid costly mistakes and meet your obligations with confidence. If this helps simplify the world of tax compliance for you, don't forget to like, share, and subscribe for more practical insights. Stay rooted, stay informed, and keep growing.